Well, so the first one cut out, but all the analysis that we've basically went over, everything has went beautifully to script. Opportunity, I said that would potentially offer a sell, right after we're running up above the highs, price returning back. This potentially being the YouTube model. Before we cut out, we were right here, literally, and price delivered beautifully to where I wanted price to go to. So yeah, we will carry this out until the until probably like maybe one more hour. But yeah, oh my god. Of course, it cuts out right when price delivers, right? Internet turned right off. It happens though, so. But yeah, if you didn't get to watch the first part of this, the first live stream, you should definitely watch that if you're just coming to this in the replay. So yeah, this price is basically delivered. This huge wick lower, we probably don't need to anticipate price coming too far up. It's already delivered sell side and buy side because it delivered lower, went off the wick, came up to the this candle closed. So this, in my opinion, has a chance to be a breakaway gap to get down below, especially with DXY going so fast. Again, the higher time frame analysis we had has literally been perfect. Right. We had, there's an SMT there too as well. You know, kind of as we've been discussing the whole time. So yeah, it's permissible for this to come back into there and use that. That would just present us with another potential opportunity. See, again, we have that SMT at the highs. So yeah, NASDAQ is the stronger one of the three. So any type of sells or, you know, things of that nature would ideally be more favorable to take in either the Dow or the S&P. I don't trade the Dow. But yeah, so something you also want to consider, this consolidation, dropping down, going higher to take out the stops here, that potentially, or that was a market maker buy model. And then now this consolidation, taking out the high, shifting market structure here and here, with a potential for DXY to continue going higher, as well as the indices to go lower. That basically can lead us to believe that this here could actually in fact be a market maker sell model. So it could be going from market maker buy model to a possible market maker sell model. Market maker buy model to get us above the high, market maker sell model possibly to get us down below the low. Right, so the market maker model here took out the previous week's high, and then now the potential market maker sell model here, if DXY continues to be raging higher, could then seek down to attack previous week's low. Previous week's high, previous week's low. Right. So yeah. Shit's annoying. It's so annoying how it freaking removed us, yo. Right before the situation was gonna play out. Right before the setup came. Yeah, if you're aiming for 5 points, there's your 5 points. Volume imbalance. Consecutive up candles here, that's an order block. as you can see here. So that beautifully delivered. We do have a 1, 2, 3 drives pattern potentially, but DXY is raging higher. So I did call this out in the last video, in the last basically live before we got cut out, right? So that opportunity was given. This whole move going lower, DXY going higher, again, this has all been discussed in the last video, and we basically saw this coming from a mile away. Notice how this here is a London's high. We literally came all the way back up to get the London's high. Not only the London's high, but we also got above the midnight open in terms of power 3. So this is actually an even better opportunity than it would have been down here. Right, just confluence wise. As long as, of course, DXY wants to continue raging higher. But we'll see what happens. See, if I would have taken this entry, which again was called out before the fact, in terms of like this potentially being an opportunity, if I would have taken that, I would have been done for the day. It's Monday. Lower your frequency, 1 to 2 trades a day, preferably 1 trade a day on NFP week. So yeah, these equal highs are suspect. So we definitely want to keep that in mind. But again, I'm favoring us potentially moving as we move forward to see us find reasons to want to see price potentially turn for a possible quarterly shift. Technology, yo. Technology. Glad I was able to hop on in a timely manner. Fix that freaking Wi-Fi issue. Yeah, so this is the DXY. I know that it's kind of covered, but you can also see it down here. Hopefully that's clear enough. And then this is the S&P. Why am I now looking at the S&P? Because again, out of the 3, I mean, that's not to say that NASDAQ won't deliver from this order block and actually continue to reach for our intended target. That's not to say that that won't happen. but I don't like the fact that we're above. We broke through a bunch of new week opening gaps. This was the strongest of the three, basically. I just, yeah, if I was going to sell, I would now have switched. Once price slid through this, like I said, I didn't want to see it happen. Once it did that, basically pushed me to switch to the NASDAQ. And again, if you're trading one indice and you're not comfortable with trading multiple or switching back between the you know, 3 or 2 or so, then you stick to your asset and you just chalk it up as you didn't have an opportunity, and then just wait and see if there is one that pops up. But again, you want to remember SMT helps you identify which asset is the stronger, as well as, if one of them does like a crazy run while the other ones do what you're looking for all three of them to do. So the one that does what NASDAQ did is the one that I would stay away from now. And then, of course, I don't trade the Dow, so I'd end up trading the S&P. So yeah, again, this here was a market maker buy model for the Dow. Now it looks like that market maker buy model is now going to switch after taking buy side. It's going to now switch to a market maker sell model. So something to consider. We're always in some form of a market maker buy or sell model, right? Or you could even say market maker or like a buy program, sell program. Those aren't the same. But generally, you want to always try to apply, if you do understand market maker buy and sell models, you want to always consider like, okay, which mode are we in? A market maker buy model, market maker sell model. What's a higher time frame showing? What direction are we going? Right? And I got a video about market maker models as well. If you want to go check that out too, probably be beneficial. So yeah, if y'all got questions, let me know. Sorry about the the connection cutting out the way it did, but we're back, and there's another entry. So this wick here, it delivered sell side and buy side. So price in terms of this range, right, shouldn't honestly have reached up into this. This reached into a fair value gap, I believe. Yeah, so then this right here becomes an intermediate term high. So if it's going to continue going lower, we'd want to see that hold as we're seeing here. These consecutive up candles is an order block. You could see that we came to like the midpoint of that, respected it. Now price is delivering to the sell side, basically exactly as intended. We see the situation that I outlined for the NASDAQ has also now came into play, right? We got now back down below the new week opening gaps, another shift in market structure. Price is now reaching lower. And again, the intended target, as it's been all morning, is the sell side. And again, I'm going to mention this another time. You notice how I didn't change my bias. I didn't say, oh yeah, now, oh my God, it rallied higher, so now let me change my bias. Let me go bullish now. No, that's not how this works. Okay, you have to know what the higher time frame's doing. Once you have conviction with what the higher time frame's doing, trust and believe that yes, there will be manipulation like this big run higher. But that doesn't change anything unless something changes on the upper time frames. So again, if you're a 1 minute warrior like we discussed in the last video, this is going to be the reason why you are inconsistent in many cases when it comes to bias, right? So yeah, everything that we have discussed this morning from part 1 and part 2, everything has all came to fruition. Every single element that we've discussed, from the interest rate markets fundamental analysis like we discussed, all the way down to the entry that I called out before we got cut off. I think I was able to call it out before it cut me off. I think it was right in the moment. but I said like the volume imbalance was there. This is what I wanted to see NASDAQ do. And then now, of course, like we've had targeted all morning, previous day's low. So I hope all this stuff has made sense, you guys. Let me... Yeah, so if y'all got questions about anything that we've discussed, if y'all got recommendations on what type of topics you'd like me to discuss moving forward, definitely leave them in the chat, or if you're watching this replay, leave it in the comments. Right, so yeah, these live streams, similar to the live streams I have in my private group, I hope that they give you value. Right, so if y'all let me understand what you struggle with, then we'll be able to, cater things even better to you guys and everyone that supports the channel and stuff. So now we got this fair value gap here, and then we also got these consecutive up candles. That right there, potentially an order block, right? As you can see, it's an order block. So price pulling back into that fair value gap, and that order block, it's another possible area of entry, but something to consider. We are so extended now. We've already seen multiple moves occur, not only from London, but also a couple for this session. So you want to consider what has already been done. There's been a lot of things that have already transpired. DXY is super extended. It could want to retrace. I think it's already taken out the no, it hasn't. It still has a little bit more room to go. So yeah, I would like to see this attacked. Right, so but yeah, everything that we've wanted has came to fruition. We've also slid through the daily volume imbalance. Pretty much done everything that we've discussed. So where could a silver bullet have been? Well, this is a fair value gap, isn't it? We're inside the silver bullet time window. This is Pacific Standard Time. Right, so there's your silver bullet. Right, or no, that's not in 7, or that's not in silver bullet time. The whole opening range passed once the silver bullet time window opened. Right, price came back into it, slid off in low resistance fashion, reaching for the previous day's low. So yeah, we want to see this hold. Again, these consecutive up candles, we want to see reaction from here. We don't want to see this high taken, and we don't want to see this high taken. That doesn't happen, and bullish and bearish PD arrays continue to be respected on our way to our liquidity pool, which is basically what's happening here. Then we have no reason, if we were in an entry, to get out. If, like, say we were up here, if we didn't take profit here, this retracement is not a reason to get out. It's just not. Go from high to low, that's just optimal trade entry. And then just a return to a fair value gap. It's also respecting the, well, kind of blew through this whole wick here. But this fair value gap is being respected. So if you entered here, like I called out, right, not financial advice, but hypothetically, if that was an entry, you have to keep in mind, in terms of trade management, you know, what PD arrays are being respected. Are bearish PD arrays still being respected? Are swing lows being broken? Is a higher time frame bias and intermarket relationships, are they all still intact? If your answer is yes, and you haven't hit like the overall target, then, you know, why get out? You could take partials along the way, that's for sure. But yeah, you don't want to you don't want to get out so quickly unless that's part of your model, right? If your model is the YouTube model, trying to just aim for the game plan in terms of ends, right? The ends playlist ICT has. If that's the case, then, you know, there you go. Get out of 5 points and you would be done. You would have got double what came to aim for from here to that low, ahead of the previous day's low being taken. So yeah, I hope everything that we've discussed has made sense. And again, if y'all got questions, definitely let me know. Because now essentially things have pretty much delivered to a T. And again, I was talking about the macros. I think I did get this out in time before the internet basically removed us for a little while. But yeah, I said all throughout the session a couple times in part one that your entries should be timed within a macro, which is the last 10 minutes and the first 10 minutes of every hour, starting at bond yield, or the bond market open, right, which is at 8:30. So from 8:50 to the end of the PM session, every last hour will have a macro, right? Pick the ones that work best for your ability to trade, right? Pick the ones that work for your specific engagements. And if you trade AM session, right, everything that was being said in terms of bias and then in terms of timing, and then, you know, me mentioning the macro, right when price came here approaching 650, I literally pointed to it and said, hey, this here, 650, right? That could be an entry, right? So order block, price returned back into it, volume imbalance, and the price sold off. Shift in market structure, took out buy side. I think I was also talking about the variation, the YouTube model variations, or just variations of every model. And that right there is an example. And I said that if this delivered everything that we've discussed from the last part, like part one before we got cut off, everything has basically came to fruition, which is amazing to see. All right, so I hope y'all have been able to learn from it. And again, we're probably going to end the session probably around in 30 minutes. So yeah, if y'all got questions till then, let me know. Otherwise, we're about to just observe how these PD arrays get respected as price continues to go lower, and just watch what DXY chooses to do, because we still got a little bit of ways to go to fully break through the high here. And then we go to, let's go to the NASDAQ. So yeah, again, I pointed this out as well. I said that's an order block, shift in market structure, buy side liquidity, pretty much right when I started this session. So that was also an opportunity. What the hell? Yo, where are y'all from? I want to know where everyone's from that be hopping on this. Wonder where everybody's at. I'm over here in California. I'm trying to get the hell out of here though. Freaking don't really like this state. Bang, just like that. Just like that. So, now pretty much fully hit the overall target that we've been looking for throughout the whole morning. So, again, just to reiterate what the analysis was, the yield, the bonds and the yields have all pretty much, like, they basically delivered. Our assumption was that we wanted to see, here, watch, so again, we wanted to see this occur, and we can now see that that is in fact what happened. We can also see that the yields are rallying, so that has basically yanked price higher with the DXY. Literally perfectly, can't get any more perfect than that. I'll let you guys go dig into all the stuff that was said early on, but in a nutshell, I wanted to see it go lower. I wanted to see this go higher. Price ended up doing exactly that, smashing in that direction. and then that in turn translated to DXY going higher. We had an SMT at the highs for the indices that ended up sending those lower. NASDAQ ended up playing games, so we moved to the S&P, found an opportunity there before we got cut off in the last like part one. And then of course NASDAQ has now followed suit, basically offering the opportunity here at this order block after a shift in market structure, after running out London's high, which is this blue box down here. Right. So, and then basically price has delivered beautifully. So yeah, then this is kind of like a more big picture 1 hour view. There was S&T at these lows that pushed price higher. Again, just like how the Dow basically did a market maker buy model to market maker sell model. If we come over here and look at this, we can also see similarity in that delivery, right? Consolidation, kind of harder to read what the accumulations were, but we do see a run on stops, shift, basically smart money reversal, completed the run to the buy side, and then now price is doing a similar thing to the Dow on the S&P, consolidation, accumulation, smart money reversal. We're probably going to see this range respect as resistance to then push price to get down below this low, unless this breaker here is respected and DXY has something that changes, which I highly doubt. I think this is all going to most likely continue, especially if DXY continues to completely destroy going higher on the back end, with the yields also rallying, which basically indicates bullish DXY and then bearish other assets, right? So yeah, I guess I'll close it here. I hope you guys have been able to learn some stuff from these last part one and part two. And so yeah, a couple videos that I mentioned were the market maker model video that I made, and then also the Power 3 playlist, right? If you don't understand those aspects of things, you're doing yourself a disservice. So definitely go check those out. If you got value from the video, definitely like, comment, and subscribe, and I will see y'all 2 or 3 times a week. Generally it's going to be Tuesday, Wednesday, and Thursday, or Tuesday and Thursday. So yeah, definitely hop on and come rock with your boy at those times. All right. So yeah, be safe, you guys. Have a good rest of your day, and I will catch y'all on the next one.